What's up, you guys? It's Cody. Today I'm going to be talking about 4 things you can do right now to buy a home without needing 20% down. Forget about it. You don't need 20% down to buy a home. This is a myth that has been tossed around way too often, and it is probably hurting your chances at getting into a home and also building that long-term wealth. I've seen people who have saved up 20%, and sure, they're in a very conservative and safe financial position, but they're not in a position to be able to grow long-term wealth. That's the slow way of getting wealth and getting rich. And I don't know about you guys, but I want the quick way to do it. I don't want the slow way. I don't want to enjoy all of this money when I'm 65 or 70 or 80 years old. I want to be able to live life right now and enjoy it along the way and have a high income and a high net worth to help support that as things go. So without going any further into a tangent, let's talk about 4 things you can do right now to buy a home without needing 20% down. And I'm also going to provide some perspective as to why you should consider doing this and why you should probably jump into buying a home a lot sooner than later. So the first thing I want to talk about here on the list is obviously you don't need 20% in order to be able to purchase a home. Saving up that extra 20%, or maybe it's 10%, or maybe it's another 5% to be able to hit that threshold is going to take you a very long time. In most cases, this could be $30,000, $50,000, maybe even $100,000 that people are telling you to save up before purchasing a home. And what for? Well, the reason why everybody says, oh, you need 20% down, it's because whenever you go and get a mortgage, you're going to have to pay mortgage insurance. This is an insurance policy that you have to purchase and pay for on the bank's behalf, saying that if you default on the loan and stop making payments, the bank is going to be protected on their investment that they made to you. So you're actually buying insurance for the bank so that if you stop making payments, it's kind of funny because you're paying extra so that if you stop paying extra, the bank is still protected, right? It's kind of a rigged game, but it's just the way that it goes. So you're going to be paying another, $30,000, $50,000, $100,000 as a down payment to get into the home, and it's going to save you a little bit on that PMI if you don't have to pay for it. But it's really not worth it. In most cases, depending on how much you put down, the PMI is going to fluctuate. The more you put down, the lower your PMI amount will be. So if you put 15% down on a loan, you might only have PMI of 40 bucks a month or 50 bucks a month. It's going to be a very small amount because it fluctuates based off of what your total down payment is and what your loan to value ratio is. So it's one of those things where, it doesn't make sense to put in an extra $20,000 to get to that 20% down threshold when you're only going to be saving $50 a month. If you save $50 a month, that's $600 per year. If it takes you 10 years, to save $6,000, that really doesn't make sense. There's a good chance you might not even live in the home in 6 years. So it just doesn't make sense to save $6,000 over the next 10 years when you have to put an extra $20,000 into the home just to get into it. It's going to be way easier to just pay that extra 40 bucks a month, 80 bucks a month, maybe it's even $200 a month if you do only like 3 or 5% down on your loan. But it's way easier to pay that on a monthly cash flow basis than to save up that extra money. The other problem that you're going to run into is a lot of times, especially right now, the house prices are increasing quicker than you're actually able to save. So if you save up an extra $50,000, well, by the time you do that, the home prices might be $70,000 higher than they were, which means that you just need another 20% off of that $70,000, which is another $14,000. So it's this snowball effect of always needing to save up more money and really feeling like you're never able to get ahead. The second item on our list that I want to talk about here today is that there are other loan options available to you. You need to look into these options to see what's actually available. There are programs where you can finance 100% of the home. You can do 3.5% down, you can do 3% down, you can do 5% down. There's a lot of these other loan options that will still allow you to qualify for a mortgage without needing the full 20% down. Yes, you're going to have a higher payment. Yes, you're going to have to pay that PMI, but if it allows you to get into a home and take advantage of home ownership, then it might be worth it. These 2 loan options that I'm comparing here are FHA loans and conventional loans. Basically, FHA is backed by the Federal Housing Authority, whereas conventional is basically any loan with any bank out there that could also be backed by Fannie Mae, Freddie Mac, or some of these other large government-backed lenders. So these 2 different loan types, there are some differences to them. If you do plan to hold the home for at least 4 to 5 years, maybe you're going to live there for that long, or you plan to hold it as a rental property, then it probably makes sense sense for you to get into the home with a conventional loan rather than FHA. That's the best option in my opinion. That's what I've done on my rental properties, and for me, it's worked out great. I'm really glad I made that decision. So you need to look into these other loan options that are out there because you need to know that you can get in without needing that full 20% down. So the third item on our list that you need to look into and be prepared for in order to get a home without needing that 20% down is to have a good credit score. The minimum threshold for credit scores right now that banks are looking for is 600. This is pretty low in the terms of an actual credit score and being able to purchase a home. So you need to get your credit in line if you don't already have it there. Get at least a 600 credit score, but if you can get to a 620, a 640, or 660, or even higher into the 700s or maybe even 800, that's gonna do you a lot of good. You're gonna get a lower interest rate, you're gonna have lower fees, and it's gonna be a better all-around experience because the bank has more faith in you, in your ability to actually repay your loans. So it generally goes in tiers of 20. That's why I said 620, 640, 660. Every 20 points you go up, you get a little bit better of a deal. You open up additional loan options, and you give the bank that extra confidence that they need to be able to give you a loan with less than 20% down. So getting a good credit score is absolutely crucial. Whether you're buying a house, whether you're buying a car, or even just life in general, having a good credit score is gonna help you out a lot. And the fourth thing that I wanna talk about here is that you need to have a good agent and a good mortgage broker throughout this process. Have an agent and a lender who can guide you and tell you the tips and tricks that you need to know about navigating the world of getting a loan without needing that 20% down. If you're able to do this and you've got people on your side who can help navigate this process, it's gonna go so much smoother and you don't have to go about this alone. The market is extremely competitive right now, and so if you have these extra people on your side who are going to be able to help you find out what loan program is best, how to navigate the process of potentially buying a home as a rental property or living in it yourself, you know, how to house hack, all of these different strategies when it comes to real estate, it really just goes a long way in being able to help you build that long-term wealth and financial stability. So guys, I hope this gave you a different perspective as to why you do not need 20% down in order to purchase a home. This is something I think you should highly consider if you've thought about it. If you're currently saving up, you want to explore these other options and see if they're right for you. With that being said, thank you so much for watching. Subscribe to the channel, and I'll catch you in the next one.